Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Justin Nielsen here with a breakdown of the action in today's session, where despite more hot inflation data, we saw big upside reversals for the major indexes today, Justin.
Yeah, pretty crazy day. And we'll go over a couple stocks that were benefiting from the reversals. So we'll have HealthEquity, HF Sinclair, and AutoZone.
Yeah, we'll take a look at those charts, but first let's analyze the major indexes today. So again, a pretty stunning turn after big gap downs in the morning after, as we saw that hot inflation data. The Nasdaq closing the day up 2.2%. Even stronger still was the S&P 500 up 2.6%. The Dow up 2.8%. And the Russell 2000 up some 2.3% headed into the close today. And today's bar, Justin, really stands out on that chart. It's kind of funny. We were talking about how, rewinding a couple weeks, will we see the NASDAQ hit 10,000? Well, today we got pretty darn close, but we closed well above that level, at least for the time being. Your thoughts on what was behind what we saw in the indexes today?
Well, I mean, it's hard to say what was behind the rally. I mean, because the reality is, I mean, that inflation report was not great. We had been kind of fearing what was going to come out from the CPI, and while there was a little bit of a downtick in the headline number. The core inflation rate was, I think, surprised everybody with how high that was, being the highest since 1982, and the big thing here is that we've been wanting to see that what the Fed has been doing is working, right? Because the assumption is if the Fed sees some evidence that what they're doing is working, then they'll not have to tap on the brakes so hard. And today's inflation report said, hey, we're not there yet. We're not seeing any movement really. I mean, yes, maybe we've peaked, but I'm sorry, but if you've still got 8%, 6% on the core inflation, that's not going to do it for us. So the Fed is going to have to continue to put on those brakes. And you saw the Fed funds futures. That November 75 basis point is basically a lock now, and it was getting over 50% for the December to be another 75 basis points. And that's after we've already had a number of 75 basis point hikes. So you definitely don't have the Fed on your side in terms of liquidity. They're, hiking aggressively. And they're saying, we learned this from the Fed minutes yesterday. Mm-hmm. The pain of these hikes is what we would rather see than the pain of inflation. So at this point, they're choosing the lesser of two evils in their minds, and that's something that a lot of investors are having to contend with. So why did we rise at the end of the day? Well, the 10-year Treasury yield came in a little bit after going over 4%, but man, the 2-year Treasury, I mean, that's still up there. I mean, that was skyrocketing, and you still have that inverted yield curve, which a lot of people are saying, hey, that precedes recession. So there are still those recession fears, but our jobless claims coming in, they're still not really showing any weakness in the job market. So that's another factor here on the inflation side. If the job market is so tight, the labor market's so tight, that wages are increasing to entice those workers to work for the companies, you could easily have that wage price spiral. And that's what I think a lot of economists are fearing, a lot of investors are fearing. But we ended on a positive note. That could have just been that we were so overdone, and by the way, this is something that Charles Harris was on our podcast. We taped it yesterday. It dropped today. We were talking all about those oversold bearish indicators and how to use them. And look, we were down 3% on the Nasdaq at one point. It was pretty brutal, but we bounced back. But this is just day one of a rally attempt now. So that's what this becomes. And now we start counting to see, can we get some follow through? Because that's what's been lacking so far.
Right. And, with anything that's nowadays, it seems like related to, what's the Fed going to do based on this number, or how's the market going to react to this Fed statement or that? We often talk about how, well, first of all, expect more volatility around those headlines, and that's definitely
we got it today.
Sound like what we got today. But also something that we've talked about is you get the initial reaction. So okay, big gap down. Then the follow up. What about tomorrow? I mean, you know, when it comes to individual stocks, usually we say a big outside day, upside reversal closing at the high end of the range. Usually you would expect a follow up on that strength. Can the same be said here about the broad market?
I think that is the expectation that you would expect some of this strength to continue, at least for a few days. But the trick here has been that we really haven't been able to trend for very long. I mean, we had that rally in March and then another rally in July, and then we got a 4-day rally in September and then kind of a 2-day rally. It's, we
Mm-hmm.
just really haven't been able to sustain a trend up for very long. So I think, at this point, you have to really kind of let the market be the guide. You let the market do what it's going to do. I'm not willing to kind of project too much onto it, but I'll react to what it's doing rather than trying to get it to fit into my worldview.
Right. So it seems like in addition to getting the Nasdaq back above that 10-day line, back above the 21-day line, breaking this
Hmm.
downtrend that we've seen since that peak in mid-August. Okay, those are some things that we're keeping an eye out for in this rally attempt. Looking for a follow through day on day 4 or later with a strong move higher with some volume, heavier coming in. So we're keeping an eye out for all of that, but also on a stock level, what should we be keeping an eye out for?
I mean, we need more setups. I mean, on IBD Live today, we were struggling. We were struggling to look for
You'd
things
pick
that.
the treasury
Yes, right,
to look
exactly.
at.
Yeah, I mean, it was just there was no stocks, really worth talking about. Yeah, the
It's
setups are.
slim pickings.
It's very slim pickings. There's a few out there,
Yeah,
and again,
which we'll
we're
talk
looking at
about.
those relative strength leaders, but
Yeah.
man, it is just you don't have very many setups right now. And if you're going to have a market that truly has a sustained rally, you need some merchandise. It just is as simple as that. You can't do buying unless there's something really that you look
Mm-hmm.
like to buy. So
Right.
um and it's also, Ali, you sent an interesting chart, today where you kind of had you have that upper line there, but you also sent one that had the lower
Mm-hmm.
line,
Where did
and
I draw this? I'm trying to think.
you
I
know
think
what?
it's
Yeah,
about
yeah,
right there.
right about there,
Right
and
about there.
it's
I
funny
couldn't remember
because
exactly
no,
where
that's
I
exactly where you
started
did
it,
it.
but
And
that's
it's funny
basically
because
it.
if you extend it, you almost go all the way up to that gap down that you
Yeah.
had at the beginning of August, a little bit earlier. So, between that on the downside and the line that you just drew on the tops, you do really have kind of this channel that
Mhm.
is containing the market at this point. So while as strong as this was, the support kind of came at that lower end. You mentioned all of the things we have as obstacles, ahead of us. I mean, you had a laundry list, Allie,
Yeah.
and
I
um,
I have a lot of needs, Justin.
right,
Okay.
exactly. So, I mean, this is just one more. I mean, it's just one more thing. Until we really break this trend, because yes, as strong as today was, we are still in an overall downtrend.
Yeah.
Here's the short-term downtrend, but if you go to the weekly chart, I mean, you see it even in
More
starker
pronounced. Yeah.
terms that we are in a downtrend. That 40-week moving average line is down. It's just we need a lot more strength besides just one day in order to break this downtrend.
Hmm. And it just goes to show you. I mean, I I kind of felt like we had a little bit more room above 10,000, but a morning like this morning shows you, wow, we could get there in a jiffy.
Yeah.
Uh,
And we were saying that earlier
you
this
know,
week. We were
yeah,
talking about that, because I mean, I at least was, we had our little Vegas bet that we did, and
yeah.
people were saying, oh, another 9%. Oh yeah, we'll definitely get more than 9% by the end of the year. And I'm like, I don't know. We're pretty close to 10,000, 9,835 that we've been talking about from the pre-COVID highs. We're really not far from those levels, and we're already down so much. But again, that doesn't mean that we're going to go straight up from here. Just because maybe
Hmm.
this is a bottom, it doesn't mean that we go straight up. I think there's still going to be some time, which is a good thing. It'll allow those stocks to set up and potentially give us that merchandise that we're really looking for, to buy.
Right. Yeah. So it seems like, long story short, could today have been the bottom? Maybe. Could we see some follow up strength? Maybe. Could be short lived. Could be more sustained. We could see a grind from here. I think bottom line is there's a lot of scenarios that could play out, and which is why we need to stay vigilant each and
Mhm.
every day and to be able to react at everything that the market is throwing at us.
Right, absolutely. And this is again where you have those multiple scenarios in place so that, hey, if the market does this, I've got my watch list and I'm ready with stocks that look the strongest, have the relative strength. And if the stock, if the market
Mm-hmm.
goes the other way, I've got this defensive, I've got these
Right.
exit strategies, I've got these all in place. And if the market goes back and forth, hey, this is how I'm going to handle it. How I'm going to make myself be patient
Right.
until it's a trending market that you can actually make some money in as opposed to a chop and slop.
Exactly, because I feel like that's the difficulty for active investors right now, because you get a gap down like this morning, and some participants on IBD Live are saying, "All right, SQQQ, what should I be shorting?" And then
Yeah.
when we started getting a reversal, "All right, well, let's go TQQQ. What should I be buying?" And I feel like sometimes there's just this itch to do something, but
Hmm.
when you have the twists and turns that we have right now, and all the reasons that we've talked about that make it difficult to make a directional bet for any sort of length of time, that's why we're for the most part just enjoying our popcorn on the
Yeah.
sidelines right now.
And the reality is, I think we all believe because we've seen it so many times. After bear markets, you get these phenomenal bull market rallies. And, it just sometimes takes some time.
Mm-hmm.
It kind of takes that washout, takes everyone kind of giving up and, just having the cloud over their heads for a while. But then when that bull market does come, it can be so powerful. And if you're positioned right, that's
Mm-hmm.
where you can have those life changing portfolio changes. And that's, I think, what we're all looking forward to. But
Yes.
you have to realize you don't have to get in at the very bottom tick in order
Mm-hmm.
to achieve those big gains. You can be getting in over the first few days and weeks and still have so much room to go. It's not about getting in at the bottom, it's
Mm-hmm.
about getting in right and protecting yourself.
So well said. Definitely worth repeating. And I know we spent a lot of time on the market today in the show, but I mean, if there's ever a day that we're going to be spending a lot
Right.
of time, it's on a day like today. But let's check out a couple of sectors. I'm just going to breeze through these really quick, Justin, and then we'll get to those stocks. So we have XLE Energy with a strong move higher today, up about 4%. XLF and financials earnings right around the corner. Look at this big upside reversal standing out on the chart, also up about 4% today. Chip stocks, how did they fare? Also up today, not quite as strong, but a pretty strong reversal with a gain of over 3% today. A pretty beaten down group here,
Yeah.
though.
Hmm.
But let's take a look at HealthEquity, because this chart stands out to us, Justin, because it's not making new lows. We have an uptrend. We have the moving averages headed in the right direction, a nice orderly pullback, and a strong move up today with some volume behind it.
Yeah, quite a bit of volume. I mean, that was 100%, so almost, pretty much double its normal average volume. So that spike on the blue side really sticks out, and so much so that it gets a little special marker there to identify it as, the largest volume since the base. So this is one of the things that MarketSmith kind of helps you kind of draws your attention to these things that are very important. But yeah, it's kind of broken a downtrend that started yesterday. Not that I would have wanted to get ahead of that CPI report, but
Right.
you had a strong follow up today, and so again, these are the stocks that we're looking at right now because that relative strength is just so attractive. It's this market is pulling so many things down, and you can see HealthEquity trying to resist it and getting
Mm-hmm.
support at its 50-day moving average line, whereas so many stocks, I mean, what is it? It's like 85% of stocks are below their 50-day moving average lines, and this one's still getting support at it. So
Mm-hmm.
it's that kind of activity that you want to see in stocks
Right.
that are setting up and potentially going to lead the next
Yeah.
bull market.
Quick thoughts on the fundamentals here. I mean, forward looking estimates for annual earnings strong after an expected little bit of a dip here this year. And we have top line growth kind of splotchy as well. basically in the single digits here. But obviously, ideally, we would want the strong fundamentals along with the strong technicals. But I mean, price is what pays, right? So it seems like
Yeah.
the technical action even more important than maybe some warts on the fundamental side.
Well, and this is what we call a turnaround, right? So, and if you look at the model books that Bill created over decades and decades of market cycles, a good portion, about 25% were turnaround and cyclical companies, and so this kind of falls in a different category. So you have to look at it a little bit differently, and this is where a lot of times the technicals will lead. So maybe it's not ready yet. Maybe you want some more quarters, some of those estimates that you see for
Right.
next year, kind of coming in and being a little bit more. Reality as opposed to fantasy. So
Right.
you can certainly wait for that. But by the time that turn happens, a lot of times the move in price has already started.
All right. Well, let's take a look at Dino. Is it dynamite, Justin? We got an upside reversal at the 21-day line in Wednesday's session. A follow up today. Didn't quite get the volume behind
No.
this one, but the price action pretty compelling.
Yeah, and you mentioned XLE at the with the sectors. XLE was actually the first sector of the 11 sector spider funds to get to
To go
positive
green. Yeah.
territory. Yeah, and then XLF was the next one. So those were kind of leading the day. But one thing that was disappointing is there wasn't much volume behind a lot of these stocks. So Dino is one that we've been talking about. Of course, they have that cute little dinosaur mascot. But here again, this is one that isn't even coming down to the 50-day. It's getting support at its 21-day line, and volume wasn't that great today, but you did see it come in on the upside as it was breaking out. So
Right.
that's positive. You don't need volume to come in every day, but the more volume you have behind a move, the more confidence you have that there's institutions in there with you.
Mm-hmm. All right, one for the watch list. And last but not least, let's take a look at AutoZone. Is it in a buy zone, Justin? I mean, it seems like that round number at 2,200. A lot of trading action, kind of around that level. It's gotten above it now. But why is now the time to take a look at AutoZone when we've seen a lot of fits and starts? Yes, generally moving higher in an RS line blue dot now, but what's different about this base than the last couple here?
Well, here's one thing you can do. So with the pattern recognition, if you just kind of hover over those green areas, so you get what, a 13% depth for this base. The prior
Mm-hmm.
one was 25%, and the one before that was 17%. So certainly compared to that 25%, and look, that one kind of reset because it almost knocked out a
Mm-hmm.
lot of areas of prior support, and so you kind of reset the base there, and now you're doing a much tighter base. So I would say that this isn't one necessarily that's buyable right now, but I'd like to see how it finishes this cup. And the relative strength line is already there. It's got that strength. Look at the earnings stability on this. It's got a 22% annual earnings growth rate. That's each year for the last 3 to 5 years that is able to grow 22%, and the earning stability is 5. That's a 1 to 99 number, with the lower numbers being the more stable. So this has got pretty stable earnings, and that can be, that can really lead to long-term moves. And so you don't have blockbuster gains here on the revenue side, but they're decent, especially the fact that a lot of companies are coming in with earnings and they're guiding down, guiding
Mm-hmm.
lower. It'll be interesting to see how this fares, but certainly in a recessionary environment where people are saying, okay, if I can spend a little bit of money to just slap band-aids on my old car rather than going out and buying a new car, that's where AutoZone can really do well. And this was our stock of the day, and one of the things I learned from the story today from Aparna is, hey, they not only have this do-it-yourself mentality, but there is also a commercial business that's growing a lot. It's the do-it-for-me, kind of idea. And so that was something that's interesting and something that piqued my interest enough that I'm going to do some more research on it.
Fantastic. Well, thank you, Justin, so much for sharing that. We hope everyone checks out that article from our own Aparna Narayanan. And that's it for today, but we hope you join us tomorrow for a day of fun. There's a lot going on. We've got IBD Live in the morning where we will be joined by Scott St. Clair, usually along with you, Justin, on the Monday panel, but we've got him on Friday this week. Then coming up at noon Eastern, Ed and I are going to be on Barron's Live for a discussion of how to prepare for the next market rally. Who knows, after today, could be right around the corner. So we'll get you prepared for that to take advantage of the next move higher in the market. Then, of course, we've got our stock market today video to wrap up the week. Who knows where we'll finish for the week, but we'll break all of that down for you. And coming up at 5 p.m. Eastern, Dan Fitzpatrick of StockMarketMentor.com joins me on Trader Tales live on YouTube. So it'll be a day of fun. And I guess if any week is going to be a nonstop day full of my face and along with Ed. Me and Ed, we're going to be spending a lot of time together tomorrow between IABD Live, Barron's Live, and Stock Market Today. And then we've got Dan coming up. If there's any day for that, seems like this week is a pretty good week for the wall-to-wall content.
Absolutely.
And Justin, the latest podcast episode has dropped. So
yes,
you had a very interesting discussion this week with Charles Harris about psychological indicators.
Yeah, I mean, because we were, looking at so many things being oversold, but you have to be very careful with these because, as we've often said on IBD Live, oversold can get oversolder.
Mm-hmm.
So you got to be careful. But we go through all those warnings and some really good history lessons from Charles Harris.
Love it. All right. Well, check that out at investors.com/podcast. We'll see you right back here tomorrow. Have a great evening, everyone.